Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. Nifty has seen a new milestones into 2021. We have been hitting new all-time highs. We started with, if you look at December 2077, the last year Diwali, Nifty was hovering somewhere around 12,600, 12,700. And though 2020 has seen a wild momentum, we had a corona fall, V-shaped recovery, and since then this year has been the fantastic for the bulls. Most of the investment portfolios have been seen amazing returns in last 4 or 5 years. So if I just look at the Nifty, 16,000, 17,000, 18,000 milestones has been achieved and is up by around 40% since the last Diwali. Sensex is up by around 40% since last Diwali. We have seen 40,000, 50,000, 60,000 levels now onto the Sensex. So if you look at, still the structure of Nifty seems very, very bullish. In the recent last 1 weeks, 8 to 10 trading sessions, we have seen markets have been slightly correcting from high levels. Nifty has seen around 3.5% fall from higher levels. Mid cap and small caps have seen slightly more aggression in the profit bookings, which are down by around 10-11% from their higher levels. So again, it was slight fear on this trade on the profit bookings, and this is the first time where the history is not repeating, which means that if you look at the most of the fall or correction from the higher levels, the underperformer were beaten aggressively, and this is the first time where underperformer remained constant, but the stocks which has seen a huge run up have seen a correction of around 20-25% from their higher levels, be it the IRCTC, be it the Coforge, be it the Naukri. There are n number of stocks which have corrected from higher levels like Berger Paints, Balrampur Chini, and n number of stocks. So again, during this fall, the stocks which have seen a huge outperformance have corrected. What's the next where we think that Nifty is? We think that Nifty is still in a strong bullish trend. So first, let's look at the weekly chart over here, and this is the Nifty Heikin-Ashi weekly chart, and this is the one chart which I every time follow when I want to look for a bigger picture or a bigger trend into the momentum. So basically, the theory I follow, and I have done a video on this same for chart, for one chart what investors should look at. And if you go to our Equity Master YouTube channel, you'll find that video. This chart says that, and the theory is very, very simple. When you see two Heikin-Ashi bearish candle and the lows been breached of the two bearish Heikin-Ashi candle, the trend for me changes. If you look at the whole scenario, we are still into the bullish territory, though we corrected around 3.5% from higher levels. But if you look at the weekly Heikin-Ashi candle charts, they are very, very bullish, and there are no signs of fear as of now. Looking at the weekly chart of Heikin-Ashi, if you use the top-down approach onto the technical charts, we started with weekly. Now let's look at the daily chart, how it's panning out. So here, if you look at the daily chart, we have seen a series of gap when we broke about 18,000 levels. So if you look at the year, gap 1, gap 2, and gap 3, where the consecutive 3 gaps where we have seen onto the Nifty, and all the gaps in the recent fall, right from 18,600 to 18,000 levels, have been filled now. And it is a said in technicals that the gaps fill, and again, that's a debatable topic over here, that gaps do fill or not. In this case, the gaps have filled, market have taken support at the gaps level, and this is very, very important. Again, all the gaps have been filled and markets are showing signs of a momentum. For me, the worry over here is the bearish candles being formed. So right at the top, we have seen bearish engulfing, the 3 negative momentums, which indicates the 3 black crows, which is again a bearish sign. Again, this is not the first time that we have seen the bearish candles been forming out since in the last 1 year. If you look at this since the start of 2021, let me show you the chart over here. This is not the first time that the bearish structure has formed on the candlesticks especially. If you look at the last since 2021, this is the fourth time the similar structure has been, and it is just a matter of time. Markets retrace after a strong rally, again it resumes the bullish momentum, and that's the case we have seen in the last three scenarios. After forming a bearish candlestick structure over there, market retraced slightly lower. Again, the most important, the previous lows were being held. Sometime it might happen that the breakout retest has happened, and in this case the similar structure has happened. Let's move on from a daily chart now to the 2 hour chart, which is again for me a good entry point of a view from trading per se. Again, if you look at, if you remember, we started with weekly where the primary trend has been identified. We started with then we went on to the daily, looking at the structure, and now we are moving on to the 2 hour chart over here. Look at the structure over here. Most importantly, if you look at, we broke out at around 17,950 levels. We went to the gaps up in the three consecutive gaps. We retested those 17,950 breakout level. We made somewhere around 17,980 low, and again the momentum resumed on the bullish side, reclaiming around 18,000 level on also on intraday basis. So here the breakout has been retested at 17,950, 18,000 zone, and which is very, very important. And when this breakout retest happen and price resume, from a trading per se, this is the best risk reward trade you can get onto any chart. So here the breakout retest happened. We are again back towards 18,200, 18,150 levels. Now if you look at the lower panel over the stochastics, again I'm not using the traditional 533. Here I'm using 1455 because I just not want to play just a momentum of 100, 150 points, but I want to look for a fresh momentum starting after the retracements. And if you look at the previous two over there, we made a retraced, we made a bullish crossover, and the new trend momentum started. Similarly, if you look at the recent levels now, where we are above 18,000 levels, we are witnessing a positive crossover on stochastics. And basically, stochastic is the momentum indicator, which is still showing that the bullish momentum is there onto the prices over here. Now again, the only risk for me over here is the bearish three candles, bearish three crows, and the bearish engulfing formed right at the top. And once that is taken out, I believe that the momentum is still there into the for bulls. Though we might consolidate over here, for me, if you look at the red dotted lines over there, for me, the trend change level for the Nifty over here is 17,400 levels, which were the previous lows. So 17,300, 17,400 till not broken down, or we are not closing below those levels, I think still there is a huge room for bulls, which can take Nifty onto the higher levels. As an investor, you need to keep the watch on the weekly Heikin-Ashi candle. Again, my strategy is, as I said, is simple. When the two bearish Heikin-Ashi candles are formed and the lows are being broken out of the two consecutive bearish Heikin-Ashi candle, the trend change, which we have seen in 2020, and since then we haven't seen such structure happening out. So you need to keep a watch on this, and 17,300, 400 till held. I think bulls are still in control. Retracements or dips should be a good accumulation level. Again, stocks would be the debatable what stock you should select. But for Nifty, I think the bulls are still in control of the markets, and one should definitely look till 17,300, 17,400 is not breached. I believe that the bullish trend would continue onto the Nifty. So signing off, before I sign off, request you to click onto the like button and click onto the bell icon so that you receive the notification as soon as we release the video. Signing off, Brijesh Bhatia. Thank you.